All right. Here we go. 2024, off and rolling, off and rolling. We love it. I love it. I'm so fired up for 2024 and what's ahead for all of us, whether we're buying, selling, or holding. I think 2024 is going to be a great year. So I want to start out with a couple thoughts, okay? Colin Powell said, perpetual optimism is a force multiplier. Couldn't agree more, right? You got to have a sunny outlook on what's going on. All right. Jordan Peterson came out and added to that. And he says that optimism is courage if it's not naive. Be careful, right? You don't want to tell yourself a story that just ain't true. You got to be smart about it, right? You got to be positive, but because of positive influences, right? And then Sir Winston Churchill comes out and he says, the pessimist sees difficulty in every opportunity, but the optimist sees opportunity in every difficulty. Boom, right? And I think all those apply to investing. You got to be able to look ahead through the rough patches, right? And some years are going to be harder than others. But most of the time with real estate, it's up and to the right. Properties are appreciating in value because of inflation, because of appreciation and all that. You just want to make sure you're owning right and you got the proper timelines. The horizons are working for you. So let's take a look at what's going on this week in Florida's Emerald Coast real estate. There's some good things. Let's take a look at them. Here, let's start right here. So this is what we're watching this week, right? How good are people feeling right now? We talked a little bit about this last week. When people have confidence in the future, they go out and they buy stuff. If they're confident their job's going to hold up, they're getting bonuses, they're going to have a good year, all that stuff, they'll go out and they'll buy real estate at the beach. They'll rent, they'll go on vacations and rent properties at the beach. So that's what we're watching. We're watching unemployment. We're watching earnings, how much people are making in money, right? So they can go out and spend. And if they're doing well and companies are keeping people employed, that means the companies are doing well, all right? And they're spending, all that stuff. And then we're going to look at what's going on with short-term rental markets across the country. Where are they? How are they holding up year over year, last year versus this year? We're going to look at those. So let's start with unemployment right here and see if people are staying gainfully employed. So they go out and buy. Let's see. Okay, look at this. Here's our graph going back till before 1950. There's a long time, right? And you see the spikes, all right? Unemployment climbs, something happens, people start hiring again. Unemployment climbs higher, around and around and around. And then if you look at what's happened recently, that huge spike because of COVID on here, right? See that huge COVID spike in 2020? That's when they shut down everything and people sent folks home. Now, since then, unemployment's the lowest it's been since 1969. That's a long time. People are working. That means they have money. That means they're renting. That means they have a job. That means they're going to be buying. And if you're if you're a business owner, that means you're rolling because you need to hire folks because customers are buying your stuff and things are going up for you. You have confidence. We like that. So the unemployment situation right now is very bullish, and that's good news for property owners here at the beach. Right? From a rental standpoint, and if you're going to sell, cool. You'll be able to hold your prices. That's what it looks like to me. Okay, let's look at wages. Are people making money? All right, are they going up? So here, take a look at this. This shows us wages going back 10 years to 2013 through 2023. Okay, and you'll notice right before COVID or right at COVID, it just spiked way up and then it spiked way down. Companies had to shut down. They laid people off. Nobody was working. Since COVID, though, we've climbed out and now folks are making money. All right. People are paying a lot of, employees are paying to get people back in working. So people have money, right? You're doing good. It looks like wages rose a healthy 4.1% last month from a year earlier. And the unemployment rate for December held at 3.7%. That's good because when people are making money, they're buying stuff. And when they're making money, they're buying houses and condos at the beach. We like that. And they're renting houses and condos at the beach. We like that. And by all accounts, it looks like folks are making more money. And that's great news. That's great news for us. Here's some good news. It could be anyway. Insurance. While I don't know that's going to go down, it looks like it might not go up as much as it has been. I mean, we've had some massive jumps in insurance. But I was reading the Wall Street Journal. I got it right here talking about reinsurers. These are the insurance companies for the insurance companies, right? And according to the Wall Street Journal, these reinsurance stocks are starting to drop. Matter of fact, it says right here, judging by recent stock moves, investors seem to think that the tables are turning on insurance. Shares of reinsurance providers such as Arch Capital Group, Everest Group, and Renaissance RE have fallen over the last 3 months. Meanwhile, primary insurers such as Allstate, Travelers, and Progressive, who we're all familiar with, have beaten the S&P 500 over that same time. The journal goes on to say that these higher returns draw more capital for reinsurance, which will likely take a lot of pressure off the pricing to cover these normal insurance companies that we're used to dealing with, right? They go on to say that overall pricing for global property catastrophe reinsurance, as measured by Guy Carpenter's Global Rate Online Index, all right, that's a mouthful, right? But at any rate, what they're saying is that was up 5% for January renewals, okay? And that's up, but here's the good news. That's down from a jump closer to 30% the same time last year. So while it's up, it's not up nearly as much. How that's going to impact the cost of your insurance, I don't believe it's going to go down, but I don't think it's going to keep jumping at that same rate. I think you'll start to see some leveling out, which is good news. You can start to be confident in what's going on there. What else are we watching? So this is cool. Take a look at this. This is a list of the top 50 short-term rental markets in the country put together by AirDNA, okay? And it's November of last year versus November of this year. They're just looking at performance and how they're doing. Now, the cool thing, at least what I take away from this, is out of the top 50 markets in the country, our area has 4 of them, right? Destin, Gulf Shores, Orange Beach, Alabama over there, 30A, Panama City Beach, okay? We are in the hot zone for that, which is super cool, super cool. In 3 of our markets on there, Destin, Gulf Shores, and Panama City, all show, and you can see it here, that there's been an increase in demand. All right, November versus last year versus November this year, which is a little bit contrary because I know the properties that we manage seem to be a little bit flat this year. I know we got some last minute bookings, but it felt a little flat. But I'll take it. 38 was flat according to this as well. But here's the thing: as I look at this, here's what I'm seeing, and I know and I feel it. Right. Florida is where folks are going. Florida, Texas, Arizona, Carolinas, Tennessee, right? The north is moving to the south, the migration patterns. That's bringing people here and they're owning, right? We got baby boomers are retiring and they're buying places in places like here. Okay, we have unemployment's down, wages are up, people have money, there's confidence in the world here. And when they're confident, they come and vacation at the beach and they buy places at the beach. So with that in mind, it really feels like we're going to have some softening, perhaps a little bit, but I don't think prices are going to come down much. I think rents are going to come down a little, but probably not that much if you're looking for wholesale drops. I just don't see it. I think I'm highly optimistic that the long term we're going to be great. I think everything screams Northwest Florida over the next 10, 15, 20 years is going to be massively successful. So that's where I'm at. Here's the thing though. The next 5 years, the short time is always difficult because it's so risky, just the short term, right? So if you're going to own 5 years or less, run, get out, mitigate your risk because you just don't know. There's just too many factors can impact a short period of time. Long term, I'm a buy and holder. I'm not selling my stuff, the stuff that I'm in for the long haul. Now, granted, I did sell a property last month, But that was a short-term property I was holding, and I was able to capture high dollars on it. That worked out. Yeah, right? But for my other properties, I'm holding them. I'm going to rent them. I'm going to rent them. I'm going to rent them. And they're doing great. And I'm just going to hold them forever, literally forever, unless something massive happens in my life. But no, that's not what I'm doing. I'm selling my short-term stuff that was always going to be short-term, and I'm holding my long-term. So if you're in this thing, if you have properties that you're 5 years or less going to own, send an email, info@smartbeachinvestor.com. It's what we do, right? We can tell you where the values are and how to capture max return, right? If you're long-term, if you're 5, 10, 15, longer the better in terms of years, send us an email, info@smartbeachinvestor. We'll watch the market for you, and we want to help you max out your rental income, right? Because if you're going to own it, you might as well get top dollar on your rental, get max return. Okay, we do that. That's what we do. We help you max out your position as a buyer, a seller, and an owner. We're good at all that. It's what we do. All right. So there you go. That's your week update for what just occurred here, the second week of January 2024. Goes fast already. Who knew? So there you go. Have a great week. We'll see you next week.